Good morning and happy Friday. Mark Soderberg with ADM Investor Services with your morning ag market update. Prices are mixed and very little change across the ag space this morning. Corn and soybeans are both down 1 to 2 cents. In the wheat, mixed trade there, generally within a penny or so of unchanged. In the products, up about a buck in the meal, while down 20 points in the bean oil. So far, no confirmation of any Chinese interest in U.S. soybeans ahead of the Trump-Yi meeting next Thursday on the sidelines of the APEC summit in South Korea. Lack of confirmation, however, did not stop speculative traders from going on a bit of a buying spree yesterday. We had them buying about 12,000 contracts of corn, 8,000 contracts of soybeans, and between 4,000 to 5,000 contracts each in the meal, oil, and in Chicago wheat. Open interest in meal, that fell over 6,000 contracts yesterday, suggesting strength was largely short covering in nature. We estimate money managers now have been buyers in meal for 8 consecutive sessions. However, still leaves them with a rather large short position at around 100,000 contracts. In corn, however, open interest actually jumped 15,000 contracts, suggesting fresh money coming into the market from the long side, whether it be in speculative or end users, locking in future needs. Again, no CFTC data this afternoon with the partial government shutdown. Late yesterday, the Buenos Aires Grain Exchange, they estimate Argentine corn plantings advanced to 34%. It's running about a week ahead of last year's progress. Wheat harvest is underway, coming in at 5%. They kept their wheat production forecast unchanged at 22 million metric tons, at well above the USDA estimate at 19.5. Rains here in the U.S. started to fill in across the southern plains gradually. Over the weekend, these rains will shift east into the Delta, the Gulf Coast region, in addition to the Ohio Valley, bringing pretty heavy widespread rains to the region. Lighter amounts in the northern Midwest, likely not to trigger significant harvest delays there. In South America, mostly dry conditions over the next week or so. In the west central and northern growing areas of Brazil, this should enable soybean plantings to advance rather quickly. Rains will be moderate to heavy across the south central region. We have better prospects for rain across Mato Grosso and the northern growing regions in week 2 of the outlook, which something that is much needed. Overall, I'd view the weather in South America as price negative. Inside trade in D's corn here overnight, consolidating a little bit here after the recent gains, actually just reaching new fresh session lows, down 2.5 cents. Resistance on the upside is at that September high at 431.25. At these price levels, I sense the market is right now discounting an average U.S. corn yield at least 4 to 5 bushels per acre below the USDA forecast of 186.7 in September. Bean futures did carve out a new 1-month high overnight before pulling back. Next resistance for November is at the September high at 1053. I think we're going to need to see better evidence of Chinese interest in U.S. soybeans in order for prices to push up through that level, maybe up to that 1075 range. Talks between U.S. Trade Secretary Greer and Treasury Secretary Bissett with Chinese officials this weekend in Malaysia could certainly trigger price volatility when we reopen on Sunday night. Trump just continues to talk up his relationship with Chinese President Yi, so we're just going to have to see if he and his administration can deliver for the U.S. farmer. Inside trade overnight for December bean oil with the U.S. government shutdown still lack clarity on the implementation of Z45 tax credits for biofuels. Next, also saw a 2-month high here in the meal overnight before pulling back a bit. Resistance there is at $300. Not much fresh news here in the wheat. Resistance for December Chicago comes in at its 50-day moving average at 517.5. 506 is resistance for Kansas City. Thanks for listening, everyone. Have a wonderful weekend.